Data Capital Investments, first LTNC buy in 3 years. Yes, this past Friday, I bought more shares. I bought 666,967 LTNC shares. So that took me from 1,555,055 shares all the way up to 2,222,022 shares. You see the numerology I've been working with. So everything is in due time. I love the share count I'm at now. And you'll see right here, my average price is 0093. Before it was a penny and a quarter. So it was 0.0125. Now I'm under that penny mark. And if the price stays around these levels, or if it goes lower, I do see myself trying to add more, even at a cheaper rate, because I see the value at these prices. And that's what I've been talking about on Twitter for months. Value, value, value. Make sure you're buying stocks at a value, right? And are you making sure you know your company's valuation? And so that's very important. LTNC, with all the dilution that was happening, that was going down, all for good reasons, as I've talked about before, because we had to pay people. That still takes a weight on the stock. It still, weighs the stock down, and because it enlarges the float, which raises the market capitalization. And if the market capitalization is higher, and the business underlying it isn't at that valuation, when you really look at the numbers, that's where you get that overvalued aspect. And so this is the first time since we've been tradable on the OTC markets and pink current, where I felt like there's been value, and that's why I bought. I've been patient, and I'm glad I was patient, because even if it does go lower in price, I'm at an opportunity where I still have some dry powder to use. I didn't get bagged up at the top at half a penny and whatnot, or even a penny when we first got tradable. And as you see, LTNC's market capitalization right now is $26.8 million, which is in line with a fair valuation as I see the company. And we'll get into it when we talk about the Illumination buyout, when LTNC bought out Illumination Brands. And when we get into the numbers, you'll see what I'm talking about. So with the price right now at 0018 is very fair. I don't believe it's overvalued. It's not undervalued. It's right in line. So that's what I'm saying. If you take out whatever dilutions is left, which I do believe is probably about $1 billion. So that's where you can get a little bit lower in stock price. But right now, even with 1 billion shares still to come online, I think it's a safe place to add for myself, which was my first buy at $26 million market cap. So just for some gematria, so this is some interesting things. I'm calling a soft bottom. I feel like if LTNC does not hit trips, we are damn doesn't hit trips again, because obviously we were in trips at one point. If the stock does not hit trips again, you could essentially say anything from here to that level is essentially the bottom in price. So that's why I have my gematria. D. Arthur calls a bottom on LTNC at 0018, 106 reduction. D. Arthur buys LTN stock August 23rd, 2024, 106 reduction. Hydrogen infused water equals 106 in English reduction well. So you see that connection. I'm calling a soft bottom right now at 0.008 18. I bought stock on Friday, August 23rd, connection, and it is in connection with our flagship product, locked in hydrogen infused water. And so then also you have D. Arthur has 2,222,022 million shares, LTNC shares, which equals 333 English ordinal and 135 in reduction. So that's a good combination right there. Again, DeArthur has 2,222,222 shares. So I just brought out the million right here. LTNC shares, 333 English ordinal. Very powerful. And when using the Colell rule, if you're just one digit away from a specific number, you can essentially say that is close enough in gematria. I've talked about the Colell rule plenty of times in the past, so I did it. DeArthur IV owns 222 million LTNC shares, which is 332 English ordinal and 332 reverse ordinal. And then DataCap owns 2,222,022 million shares written out, LTNC shares, which is 332 English ordinal as well. And then DeArthur calls bottom on LTNC at 0.0018, 330 English ordinal. Again, 0 is just the value placeholder, so that's just 33. So that's really just the start. We're going to really get into the earnings report now. I just wanted to get that out the way that people can say what they want about me, but I put my money where my mouth is. And when I talk about the company, the stock, they always say, oh, you're bearish or you're not seeing it a certain way. No, I actually do the work. I put the work in. And then when I put the work in and I find my spot where I want to add, I add. I said I was adding around this range because I saw the value. And as of right now, it's looking pretty good. And that 26.8 million is going to come into play when I get into the fundamentals for Illumination and LTNC. But first, let's get into the actual quarterly number 2, 2024 earnings report. We're just going to go over some basic numbers real quick, so just follow me. One of the positives I do want to bring up, it's a positive, and follow me. The net increase in cash was $480,000. The cash at the beginning of the period was $997,000. And at the cash at the end of the period, we essentially retained all of it, essentially, at $577,000. Okay. And so that's adding, Michael Aragini's shares, Guinea shares. Of those 8 shares, those should be coming in Q3. So I'm hoping with the decrease in price now, those were his converted preferred shares entering the float. But it's good to see that the company is retaining cash on hand. They're diluting the company shares wise to pay out shares because people want shares of the company because they believe in it. But in the process, they're conserving that cash. So that's a good sign. All right. They're trying to be good stewards. And so people can say what they want. I've had my critiques about the company, but you can look at the paperwork and you can see the story. At the end of June, at the end of Q2, our current assets was at $434,000. Our inventory is at $146,000. So our total current assets on hand is $581,000. And then we have $25,000 in equipment. So we have about in total $606,000, so over $600,000 in total assets. We've been building up our assets a lot more. We're growing. So these are good positive signs. When we talk about what we still need to work on, obviously, when you get into the liabilities of the thing, we have a lot of accounts payable. We have a lot of accrued liability. We're paying people in stock. We have convertible notes. We still have the $121,000 that's due to Tom. So when you look at the current total liabilities, we're almost at $4 million, right? So we're at $3.9 million. And then obviously we've talked at length with the stockholder deficit. We have preferred shares. We have 8 shares. Professional service fees. I've been trying to keep track of the dilution share wise. We've added about $1 billion since being pink, and I still think we have about $1 billion to go. But the difference before is when the billion was being added to the float, we were way too overvalued, and we didn't have Illumination under the LTNC banner. But now that we're at 0.0018, we have Illumination Brands under our banner. They have $10 million in assets. They have $25 million in revenue. They're essentially absorbing our debt. So when we're at a 26.5 million market cap today, with more dilution possibly to come, upwards to $1 billion shares, that's how you counteract it. Because now we're justifying where we're at, and we won't know the full dilution until the next quarterly report for the third quarterly report with Illumination actually under the LTNC umbrella. So these are things that we need to look out for as investors. Moving forward, locked in sales. So the Q1 2024 sales was $64,000. The Q2 sales, which does have us getting pink on April 1st, 4114, up into June 30th, was $175,400. All right, so that was over a doubling. All right, that was almost a triple. We almost tripled our sales from Q1 to Q2. Now Q3 is going to be a little bit different. Obviously, we had a decrease in sales. Obviously, we didn't have that frantic buying of getting pink. So we'll see what happens in Q3. But overall, the first half of 2024 sales, we had $239,000 and $727. $239,727. All right. So almost $240,000. I wish we had that per quarter. I wish we were making $250,000 per quarter. But with Dubai finally getting underway, finally getting that order, and that being a starter order with orders increasing over time, I do believe we can do $250,000 per quarter in the future, and maybe that could be in 2025. Cost of products sold, the COPS, cost of products sold, rose dramatically, which I don't know why. Maybe the management, if they watch this at some point, they could explain that. But the cops, we're just going to say, is $335,000. Why? Where is that coming from? Especially when our inventory is $150,000. So where is the cost of product sold? So you're saying it's paying double. If we do a locked-in can is $3, it's costing $6 to sell a $3 can. So that needs to be maybe explained, where that money's going, or maybe that's a mistake. Even though I know there was some adjustments to the earnings report this Friday, but that's something that maybe we'll get some light on in the future, because the cost of products sold is way too high. Admin expenses costing $275,000 per quarter. That's $1.1 million annually. Total operating expenses estimated to be over $2 million annually. And so for us, and for Locked In to be a profitable operation, we have to get over that $2 million annual profit mark. So that means we have to at least make $500,000 per quarter to start really breaking even on the Locked In side of things, strictly Locked In as a company. So we have a lot of work to do still, but it's about a quarter to quarter basis. Are we seeing a positive trend? Are we continuing to go this way? If we're continuing to go this way, all these things will get fixed over time. And I truly believe that. So obviously there's a lot going on. Ryan bought water for the MAGA water. We had Dubai. We have Illumination Brands now, which not only is a distribution company, they actually own beverages as well. So that's going to be interesting on how Q3 looks sales wise. It's always a big topic, in LTNC. Share structure, share issuances. So there was 950 million shares added to DTC since Q1 of 2024 ER. And so you'll see this little graphic here I had for my Twitter. So you'll see held at DTC. This was from the last earnings report I did, was 8 billion at DTC. And so now we're at almost 9 billion DTC. So nearly a billion. And I estimate almost about a billion more to come. And at least to the DTC. There might be more restricted shares with Illumination and Brad shares, but those are restricted and those are going to be performance based. But we still had service fees. We still don't know if Guinea's shares, if Mike's shares are all added to the float already, preferred shares wise, the H ones. So that's where I'm just giving that buffer of about a billion more to go, unrestricted. So we're not out of the woods yet. But the reason why I bought is because I see the value. And if Illumination is what they say they are and what Tom says they are and everybody else says what they are, it's going to even out. It's going to even out. And then I also want to bring up, this was updated on the earnings report, the share issuances and to who. So please, if you haven't, make sure you're understanding your investment. Go and look at the earnings report. Read who owns what, how they got those shares, what they do to get those shares, what their share price average is. This is all a part of being an informed investor. And what I don't like to see is investors who haven't taken the time to really research the company that they're invested in, but they still want to have opinions, or they still want to lash out, or they want to do things that almost hurt their investment because they haven't done the proper due diligence. So I just keep that in mind. And this is why I try to help people. I try to put people in the best position to succeed, but you have to do the work yourself. So just keep that in mind. About a billion more to go, in my opinion. Oh, Nate. Hey, I haven't heard from Nate. Hey, shout out Nate Childress. All love to you. Great to hear from you. We're going to get out the dumpster soon. And we're going to get out the dumpster soon, my boy. We're almost there. All right. That was great. Shout out Nate Chill, man. He's one of the OGs from my Discord. If you're not in my Discord, make sure you go in the link in the description. Shout out. So now let's talk about the LTNC Illumination acquisition. All right. This is what we all came here to talk about. LTNC Illumination. And so what I did, I just did some copy and paste bullet points from the PR, and I'm just going to give some color on how I feel about it. Labor Smart Inc. closes acquisition of Illumination Holdings, forging a beverage and snack powerhouse. All right. LTNC is pleased to announce the successful closing of its acquisition of Illumination Holdings Inc. This strategic move marks a significant milestone in the expansion of LTNC's portfolio, enhancing its position as a leading entity in the beverage and snack industry. The acquisition, initially announced through a letter of intent on July 23rd, 2024, officially closed on August 13th, 2024, integrating Illumination Holdings' extensive distribution network and brand portfolio in LTNC's operations. This network, which spans over 5,000 retail locations across Colorado, Southern Wyoming, and South Dakota, is projected to increase LTNC consolidated revenues by more than $25 million on an annualized basis. Keep that in mind when we get into the financials. Key highlights of the acquisition: enhanced distribution. Mostly Illumination is a distribution company. Legacy Distribution Group is known for its robust direct store delivery (DSD) operation with over 175 years of collective experience in the Colorado market. So we're going to be based in Colorado to start with our performance beverages, and with Colorado being an outdoorsy type of state, I think that's a good location. It's an up and coming state as a whole, and it's kind of nouveau. It's kind of cutting edge. So I think, Locked In has a chance to do really well. And, I'm in Utah. That's only right below Colorado. So if we start to grow and Illumination, goes south, maybe I can buy some Locked In hydrogen water in a couple of my stores. So Illumination Brands, this is their brand portfolio. The acquisition includes Legacy Distribution Group with an exclusive distribution rights of notable brands like Aspen Pure Water, Zing Tea, Go Fast, Wrap Snacks, and several other dozen recognized names. So some people have actually bought some of these products and they've enjoyed it. I've known of Wrap Snacks. I know they have some other beverages as well, but that's within the distribution line, not exclusive rights. I know they distribute Celsius as well. Licenses. LTNC has gained access to valuable beer, wine, alcohol, and tobacco distribution licenses, broadening its market and operational capabilities. Amazing. This is where it comes to when you have to look at yourself an investor. If you die on every hill, you're just dead. You can't take a moral stance on everything. You can only take a moral stance on a selective things if you're able to move through this world properly, right? I don't mind LTNC gaining valuable license with, beer, wine, alcohol, and tobacco. We are a company now. We're not just a health beverage company anymore. Locked In, and this is what LTNC investors of old have to understand. Locked In is literally just an exclusive distribution rights. Obviously, Locked In is owned by LTNC and whatnot, but we have other brands to think about now. We have other products we have to think about distributing. We have to distribute products to get fees and make revenue. And beer, wine, tobacco, those are revenue streams. And we have to understand that. We can still have our health beverage, health conscious, moral righteous, hydrogen water, but that's just Locked In as a brand. LTNC, we're creating a bigger monster now. At the end of June 2024 quarter, the unaudited balance sheet of Illumination Holdings included total assets of $10.3 million and total liabilities of $17.6 million, of which $3.5 million is long-term debt lease obligations and $7.1 million is long-term debt, which the company anticipates being paid in full by the end of quarter 4 in 2025 from cash flows. So we'll get into this more when I actually look at the numbers. That's actually pretty solid. People were equating the deal to like a full-on $30 million, just boom added, but you have to include the debt. You have to include that as well. But to have $10 million in assets, $25 million of revenue, and you'll be able to pay off, debt that's almost as much as your assets within the next year or two, that's pretty solid. It's nothing amazing, but it's nothing bad as well. As part of the acquisition, Brad Wyatt, previously the CEO officer, the chief executive officer of Illumination Brands, has been appointed to the LTNC board of directors and will serve as co-CEO alongside Tom Zara, who continues as chairman of the board. Scott Darnell has also joined LTNC as chief strategy officer, board member, bringing strategic insights, to the company. Brad Wyatt stated, "The merger is a testament to our shared vision for growth and innovation in the beverage and snacks sector. I am thrilled about the opportunities this presents for both our existing brands and future ventures." Tom Zarro commented on the closure, "The magnitude of this deal cannot be overstated. The acquisition not only rapidly accelerates our strategic growth, but also brings aboard exceptional talent and innovative brands. We are better positioned to advance our business objectives significantly. I believe this is an enormous win for LTNC shareholders and our locked-in portfolio of beverages. There is much more to come now that this acquisition is complete. This is truly just the beginning." So acquisition-wise was completed, LTNC issuing 750 million restricted common shares to Illumination Brands for 100% of the outstanding shares of Illumination Holdings. So they get 750 million shares within the company. Pursuant to the agreement, LaborSmart has appointed Bradley J. Wyatt and Scott Darnell to board members. Each will be granted 200 million restricted common shares or equivalent preferred shares and connected with their appointment as board members. As officers, Mr. Wyatt and Darnell will have an opportunity to earn additional performance-based restricted equity. So the reason why I like this deal is it's a gamble for Brad and Scott. In a lot of aspects, they're saving with Illumination Brands. They're saving locked in from ourselves with our accumulated debt. And when I get into the numbers, we'll see that. So with them only getting 200 million each, but 750 million in actual the company was just as LTNC, that's pretty good. They're saying we'll put our money where our mouth is, we'll perform, and then we'll get paid on the back end when the price is super high. We won't get paid anytime in the future how we want, but when the price is super high, we're going to get paid. So I think it was a solid deal, but win-win both sides. And you know, Brad has to prove himself, Scott has to prove himself, but also Locked In has to prove himself that we can sell. But it's on the new CEO that's going to come to make it happen. So the last slide, we'll talk about the Illumination fundamentals. Again, revenue, 25 million. Assets, 10.3 million. Total liabilities, 17.6 million. Long-term lease obligations, 3.5 million. Long-term debt, 7.1 million. Short-term debt, 7 million. And so when you take the equity minus the long-term debt obligations, Illumination, without Locked In, a part of it, is a positive net equity, a shareholder equity of $3.3 million. All right. That's only taking the long term. So it still has its short-term debt, but the reason why I can take out the long-term debt in this equation is because, one, it's longer, it's spanned out. Usually interest rates are favorable, and it's smaller payments. You know, it's a kick it the can down the road type of loan where it doesn't affect operations immediately like short-term debt does. So that's why you can cast off the long-term debt in valuations. And what's interesting, so you take the revenue of 25 million, right? And the assets of 10.3 million, you add that up, that's 35 million. Okay. So you do the 35 million minus the long-term debt, that's about 28 million, right? And so where's the market cap right now? 26 million. Think about that. So that's where the value is. 25 million, 10 million in assets, 35 million minus 7 million, 28 million. So that's where the market cap is right now. So what my point is, with a net equity minus long-term debt is 3.3 million. Look at the liability for Locked In. All right. Look at the liability. All right. Almost 4 million. But that's okay And look at the stockholder deficit, right? 3.3 million. So what does that mean? We're even. LTNC is even. Illumination absorbed LTNC's locked in liabilities. So we're even around. I like where we are as a company. We're on stable ground. Obviously, we have to deal with dilution moving forward, but now Locked In has a backbone, and now it has a chance and a safety net to just move up, right? Just move up. And to finish up with some gematria for the LTNC presentation, LTNC stock buys Illumination, 333 English ordinal. Illumination Brands creates a float, 333 English ordinal as well. That's important because look, LTNC buys Illumination. Why would LTNC buy Illumination? Because Illumination Brands creates a float. And if you stick with me, if you stick with the presentation, you will figure out what a float is, all right? Because we'll be talking about Warren Buffett and whatnot. But a float is just access cash that's able to be invested and used for other capital allocations. So that's what I have. LTMC X Illumination 222 English ordinal, just like my share count. So that's what I have on the deal. I loved it. You know, it's solid. It's prudent. It's not, you know, some magic pill. It's not that, but it gets us even. It gets LTNC's financials in a stable place that we can move up from. And that's a good thing. And that's what we haven't had in 3 years. So I'm excited, and I'm excited that the management team is receptive, because there was errors in the first financial report they dropped earlier this week. They took 5 days extra, and I felt like they didn't even proofread the things that needed to be proofread. And you know, I said something on Twitter because I was disappointed in what I saw, and I could see a couple misspellings here and there. That happens, but I think there were some critical missteps, but a lot of those got rectified. You know, there were ears hearing me out, and so I appreciate that. I thank you to those who heard me out and let me explain my side of the financial thing. So that's what I've got. So to all my LTNC people, if you're not going to stay for the rest of the show, I thank you for popping in.